This podcast is distributed for general informational and educational purposes only and is not intended to constitute legal, tax, accounting, or investment advice. The information, opinions, and views contained herein are our own and may be subject to change at any time without prior notice. We do not have any obligation to provide revised opinions in the event of changed circumstances. All investment strategies and investments involve risk of loss. Nothing contained in this website should be construed as investment advice. Any reference to an investment's past or potential performance is not and should not be construed as a recommendation or as a guarantee of any specific outcome or profit. Start it. So if you go a year ago, let's go this way. It's easier on the week.
Say you're an idiot like me that just likes to buy and hold things, and so you bought it a year ago at the exact high a year ago, let's say, or a year ago to the T of January 13th. So, right. You're into it 8,700.
Yeah, I mean you're only up 271%.
Right, that's really poor performance.
You probably crapped your pants because you were down 50%.
But
really quickly back up 40%. So
I've been down more than that before in my life, and so been down more than 50% more, and it's all on time frame horizon on when you're needing funds. And if you're needing funds in a short term, then yeah, you'd be freaking out. But if you're looking more horizon and long term, coming back to like just knowing your conviction or just what you want, then you're not freaking out one bit, because every major positive reaction has a negative reaction, and every major negative reaction has a positive reaction. Now, how long do those go? It's to be determined. I mean, you look long term, everything goes up, right?
Always up.
Always up.
That's the Twitter. That was a Twitter thing when Bitcoin was running up. It was like, always up. There's no down.
Nope.
Anybody that would post anything like somewhat like, hey, we might get a correction here, they'd get lambasted. They'd be like, this is only going up. We're going to 100K by the end of the month.
Stonks are easy.
Okay. Sure. Hey, we might still get to 100K by the end of the month.
It might. Like I said, any of these negative reactions that we're having right now, it's pretty major right now what's happening. So it can respond pretty positively in short term.
Yeah, I mean, we got a 20% or 30% reaction from, the top, which was a few days ago. 28% to the bottom there. But that was that little parabola. Get the little parabola break right there. It's a bull run parabola. So we're going to get a bunch of these as this keeps going up, in my opinion, obviously. But we'll see. I mean, these little white lines I got here, that's kind of where I was staggering my orders. So, and I just hit this one here. So we'll see. I've got some deep ones just in case. If we go down, I think I said, what was it, 23? I think I showed you.
All the way down to 23. I mean, you're talking about the last time you were at 23 was just...
Oh, yeah, it's right here, 23.
Was just 2 weeks ago, So it's like...
forever ago.
Forever ago. It's basically a lesson in, have some perspective in reality of things, in that, your entry points as a whole are probably pretty good, and then you're looking at your time frame horizon. I know for you personally, you probably don't need the actual cash money in hand or in pocket right now. So the need to get in or out of something is not necessarily as great as what it might be, say, if you were dependent upon that flow of income,
Yeah. Nope. And that's what I do. My margin trades are my income trades. So hopefully I can feed my children.
Put socks on your feet type of thing.
So today, it's Jeremy Winn and Nathan Harper here. So what we're going to do, we're going to start a series that's going to be get to know your trader, your investor, but just the regular everyday trader investor. So not your hedge fund guy, not your, Michael Saylor, which, by the way, he didn't sell, and he bought in. I mean, he's still in pretty hefty profit, but there were some big names that came in. But anyways, we just want to know, it's the series of, what makes you an investor, what makes you a trader, and kind of introduce ourselves. We have had a couple podcasts where we just kind of rambled on and didn't really kind of tell you who we are. So I'm going to let you know that this is my very best friend, Jeremy Winn. I've known him for a long time, and we've been through a lot of ups and downs together. And he's a good guy. He's a smart fella, and he's going to throw down a lot of knowledge on you one of these days.
One of these days, I might actually have some knowledge. I think with time, everything kind of turns out to look okay when you're looking at most things. So you can make predictions about stocks or BTC or whatever, and eventually they will come true. I feel. I don't think that there's any definitive time frames that you could put on something of saying, oh, by the end of the month, BTC is going to be at 100K. It could. It might not. If you were wrong and it only got to 99K, that seems like the worst thing ever. But what if it goes down more? It's not that big of a deal. And so I guess kind of outlining the type of trader or person that I am, it's the investor. I'm more time frame horizon type of person, and trying to find decent points of entry that are based off of what I feel, what my convictions are, and semi what the experiences are that I've had. I've personally been investing in stocks and holdings since right around 2002, 2003 timeframe. I was really watching those things right when we were in college, Nate, and my first kind of step or look into stocks was based around the time when I was looking to graduate from college, and there were it was right after the .com boom, and so things were coming down, and that's the time frame that I get most excited for, because you see the most amount or potential for growth in that time frame to get back up. And at that point in time, there's one stock that sticks out in my mind that I always hold as a placekeeper, and that's Priceline. So Priceline.com dipped down in around that time frame, and it got down to around $2 a share. And at that point in time, I thought, oh, this would be a great opportunity for anybody looking to buy. I didn't have any money. I was a poor college kid, just graduated, didn't have a job besides driving a combine during the summer, just got married, all that stuff. So there was no way that I was going to be able to buy any type of investments for myself personally. There's no extra money. There was no money. I think I had less than $100 in my checking account at that point in time. But that drive or desire to want to see what a stock was going to do started organically. It wasn't a school assignment. It wasn't something that was given to me. It was just something that I took the interest in. And so with that, I just kind of have been watching Priceline and what it's been doing. Obviously, throughout the years, it's initially shot up.
Did they get bought out?
They just they've made some acquisitions along the way, and so they're now booking.com.
And what was the price at?
It was around $2, I want to say, back when I was looking at it, but I don't know that it shows up there as $2. But it sticks out in my mind. I can remember looking in the actual physical paper, and it said $2 and some change. So, and you know me, I still like the physical paper. I don't have a physical paper anymore, but I love to look at a physical newspaper. There's just something that's rewarding in that regard to me, and I don't know what it.
Jeremy's a young man,
yeah,
but he's an old man at heart. I go to his house and I'll come over to say hi, and he'll be on the porch with his robe and a coffee cup and a newspaper, like an old man,
and slippers.
And and slippers. Sorry, yeah. And his dog laying next to him.
That's right. It's basically I'm living the life. So. But it all started back then for me, and from there it's just been kind of a continual watch and see, cutting my teeth along the way on making some investments that have worked out and some that haven't worked out. And so what that early time frame has taught me is that anytime there's a major pullback or a major reaction in the market like that, it provides an opportunity for entry that in the time frame horizon, you'd be looking at a pretty decent growth. You could draw these correlations between anything. I mean, if you pulled up Amazon or Apple, even going back to those early 2000s, you'd be looking at a lot of differing opportunities for entry. Now, did we know at that point in time what Amazon or Apple or any of those companies were going to do? No, they were all just feelings that investors had of purchasing at those low points and being able to ride the wave to eventuality. And that's kind of what I work in right now, is that individual stocks I might not be the best at picking at, but as far as a group or a holding of stocks, I do a lot better. Certainly, time helps with that as well. And so having looking out for that horizon, I'm never going to be that person that picks the 100% a day growth stock. I personally do not like that type of growth in a short term time frame, because it creates two differing aspects. If you don't sell at the exact high point, you feel like you missed out. And then if you do sell at the exact high point, now you have the tax implications of that, but then what do you do with your cash after that point in time? Do I have something else that I'm ready to purchase or buy to move on to? What's the next thing that I'm looking to buy? And if I bought something, I want to be able to buy it. I believe in it. That's something that I have that holding in, and I see one of two things. Either it's going to be held for a time frame horizon, or it's going to be something that I believe in more long term, as far as a product that I use or a product that I can see some major growth in, type of thing.
So when you're going to look for your investment, what do you start with? I mean, do you go out looking for something, or do you, is it something that you hear? Or how does that come to fruition for you?
Well, first and foremost, you touch on the ideas of you actually have to have money to invest. And so that's the step one. When you have money to invest, then that would start the process of me looking for something. So right now, what I do is different than what I used to do. And yes, that's exactly right. I pull up FinViz and I'll pull in something. If I had some money to invest that I didn't want to additionally add to my current holdings of, my top 5 favorite holdings. You're looking at
T-Quiz.
T-Quiz is number 1, and number 2 right now is DPST, Fangu, Soxel, Nail, and then UCO. So it's quite a varying balance there. So all of those holdings right now are trading at or near all-time highs, except for Nail. Nail's got some room to run, and UCO has some room to run as well. But you look at Soxel's running at all-time highs today. Yeah. Fangu, that's probably within 10% of all-time highs. DPST has some room to run in comparison, but it's also a rather new fund. Same with
DPST looks like tremendous for growth, but
yeah. And then you look at TQ. So if I'm not looking to reallocate or put into those funds that I'm currently allocated to, then I would go on to FinViz, and I'd be starting to pull in those things that have dropped a significant amount during the last 52 weeks.
So do you normally look for ETFs? Because all those you named off were like the leveraged ETFs.
Yep. I primarily look for ETFs based on the fact that I know that my strength is not in picking individual stocks. What I believe are good stocks, it would be based off of financial information. So what type of debt do they have? What type of revenue do they have? What's their profit margin? Those types of things. That doesn't necessarily translate across the board to growth for the companies as I would see fit. And so I find that in a group of holdings, so some type of indexed, leveraged index fund provides more of a safety net to provide that growth across the holdings in a 2 or 3x fashion. And so that provides the growth that I'm looking to capture and gain over a time frame.
It's kind of a great thing you think about, because you're diversifying yourself over all the different companies. Like DPST is the banks, right? So you get all the different banks and whatnot in that fund, but you also get the 3x leverage. So you actually get the growth with it too. So in a normal stock, you would get a drop that comes through. Well, what is it? Is it, did they have bad earnings? Is something else bad coming out? Well, that you're stuck into that one stock, where this one, it kind of it diversifies you all those others. But that 3X just makes it nice, so you can actually get that growth as well.
You also get the loss too. And certainly I've seen that in my individual holdings as well. Can I write it down 50, 60, 70%, 80%? I did for 2020. And I foolishly looking back on it, it was something where I tried to get out. In fact, I sold out of almost everything around the first part of March. So it wasn't the exact bottom of the market. As soon as I got out of the market, it ticked up a green day for a couple days. And then I was like, I can't be out of the markets. I have to be in. And I know over the long term that I just felt over the long term it was going to rebound and come back up. I certainly didn't feel like it was going to be as quick of a rebound as what it was. But I was planning on, hey, I don't need this money for another 2 years. So when you got 20-year time frame horizon, when you're looking to retire, it does make a difference on your outlook of everything. Is a 20% or a 50% drop right now as hurtful in the 20-year time frame? No, but it did provide additional refocusing and conviction on entry points at a lower amount. So it allowed for me to DCA a little bit. I dumped some holdings that were more individual to get into more of these leveraged funds at a time frame where it was extremely on sale. And I looked at everything as being an extreme sale. So I can't really, if I were to summarize where I'm at and what I look for, yeah, I'm primarily looking for leveraged ETFs that are at a good price. Is it a good time to buy leveraged ETFs at their all-time high? It might be, but I typically, that's not my major buying time.
What do you look for in a good buy point? Like what's your process there?
For ETFs or anything along those lines, I'm looking for a pullback of 20, 30, 40%. Those are kind of the areas where if you just touched on the all-time high and it pulls back that amount without any major news that's out there or major event of saying, hey, COVID. I mean, that's just at the forefront of everybody's mind. But if you had that pullback,
like T-Quiz in September?
yeah,
Yeah. It was a 63% top to bottom. Now granted you're not grabbing the bottom, but if you DCA all the way down into there, you're going to get some decent entry points.
And by that point in time, at September, I was already fully allocated, and that's where it comes down to. So if I was evaluating it and I came across a stack of cash that I thought, hey, I'm going to put some more in there, then I would be looking at that point as an entry.
I had it backwards. It was almost 40%, not 60. So
yeah, and so anytime you get those 30, 40% pullbacks, that's where I would look at a buying opportunity. You could see that it came back up, it came back down, it went back up. So when I did have some funds available, I did rebuy back into the T-Quiz back at the first part of November, right at the end of October, first part of November. But that was just, I had a stack, a little bit of money that I was looking to allocate, and it's been one of my favorites since 2018 when I entered, and it's gone up, it's split, and yeah, I rode that all the way down. But my entry point, mind you, was not at the exact top. And so when your entry point is not at the exact top of the market, you can ride these markets down a little bit and be a little bit more patient. And that's where I'm kind of at. I could take a smaller loss because my entry point is lower.
right.
And so is it fun watching it go down? No, it's not, but you have to basically have some patience to be able to see, okay, it's going to make some changes short term. Part of these adjustments are good and healthy for the market. It allows for future growth. If we have stagnation, it doesn't necessarily bode well, I don't feel, for the holdings. So
Yeah.
you want some of that volatility, you want that growth potential. And I look at the growth potential being when major events happen. So when you have a major pullback, that's a major event that would happen.
For sure. So is this mostly, I mean, you're saying to have capital in there and you're not trading, you're an investor, right? I mean, longer term as an investor. So you're bringing capital outside in because you're not having capital usually inside unless you're trading your 401k and you're just getting to a certain point where you feel like something's run out of steam, I'm assuming.
Yep.
I mean, is that usually like just 401k money that you're putting in there, or just
a little bit of both?
stuff?
I probably have a mixture right now. It's probably 60-40 of what's going Roth or 401k or IRA or however you want to terminology, the protected tax trading area or avenue. But I'm not really moving much in that either because the entry points are usually pretty good or good enough to where I'm not looking to get out. And even if they pull back in a very rapid format, I'm going to look for that growth to happen right after a pullback. And so I don't necessarily find myself looking or itching to get in or out of something. If a major event happened, like what happened with the COVID, then I'd be looking at, why am I holding something? And then that comes back to the more of the
fundamentals of it.
Fundamentals or the philosophical side of why am I in something? Why do I believe in something? Do I continue to believe in something? And do I need to make trims or trades or cut completely? And I could certainly cut and trim within those tax saving accounts, your IRAs, your Roth IRAs, those types of things. And I have recently to basically capture or be exposed to other areas that I feel like I'm not currently exposed. And I'm trimming usually in holdings that have had a significant amount of growth, but I think are kind of the rocket fuel is kind of running low a little bit on it in the short near term.
Yeah, yeah. Until we get some stimulus, right?
Yeah, and even then, is it better to have the stimulus out there given to us, or is it better to have the idea of the stimulus out there? And
so far, it's been the idea. At least, last week was all, hey, guess what? Blue wave stimulus is coming. It's not here yet, but we got a pretty good week last week. So,
and I think we're going to have some of these weeks where it might not be as hot and heavy as last week, and that's natural and normal for a healthy market. You can look across the board, and we're going to have up weeks. We're going to have down weeks. The piece of the puzzles that I like to do for myself, that I've had to do over the years, is tracking the overall successes, the overall failures, and then evaluating that internally as is this indicative of me, the trader? Is this indicative of the markets? Is this indicative of something? It's really easy to feel like a genius whenever everything's going up, but the fact of the matter is that I'm not a genius. It's and I don't really feel like anybody out there is a genius in the trading world. I think people are made to look like geniuses in time. Short-term trades or short-term calls, it's very rare that you'll find somebody that made a short-term call that's able to do it consistently. I mean, the big short callers are always out there looking to make the next call. And eventually, if you start banging the drum of, well, the next fall's going to happen, you're going to be right eventually. But how much along the way did you miss out on?
Because when you're talking those big ones, right? Big short, it's the real estate market. Nobody was banging the drum too much with COVID. It kind of hit everybody by surprise. So it's like, anybody that says they caught the exact top or the exact bottom is a liar, like, regardless.
Well, and even if you caught the exact top and you're able to get out of the market, are you able to get back into the market at a decent point? And then are you disciplined enough once you get back in to ride it all the way back up again? And that's the other piece of the puzzle, is that, okay, you called the top, that's good. Are you able to get back in and then let your cash work for you again, and not feel fearful of where the markets are going,
right?
More or less,
right?
Yeah, because if you have a bear mindset, and you continually think that things are going to crash, then you're going to be always on the watch out and look out for that, and never fully be able to capture on the growth if it is a bull market. And likewise, if you're a full bull, you might not capture the bear markets as they happen. I know for myself, I'm a bull long term. I'll probably be a forever bull for the markets as a whole, based off of the indexes and everything that's out there, and the modern monetary policy of how we basically structure how the government interacts in the financial systems that we have currently structured.
Yeah. Is there anything out there that you've thought of that would actually make you a bear?
And a bear in what sense? I guess maybe
long term, like you're talking,
because long term for me,
1920s plus crash, like 80+%, lasting more than a decade type of situation. Or let me put it this way then, because you'd probably still hold. But what he's shaking his head. Yes.
I'd find other entries.
What would have to happen for you to take your money out because you're like, oh, this is just not good? Is there anything that you've even thought of?
It would have to be basically that would be the worst case scenario of complete financial collapse of the monetary system. And if that's the case, it wouldn't matter if you got out at the top or whatever, because money's not going to be worth anything at that point in time. And so I think the worst case scenario, what I would look at, 20s, 30s crash, however you want to phrase it, it would be such a financial state that there wouldn't be the ruins and rubble that would be left over, wouldn't have any structure or worth for me to have the actual money in hand, because the inflationary processes of trying to reestablish the markets of whatever would erase whatever money, the value of money at that point in time. You'd be looking at...
So the answer was no.
No.
You'd never take it out.
I would probably never take it out. I would look at readjusting holdings to fit the trends of
Okay.
where things would go.
Yeah.
But as far as taking it out, unless I need the money for in my pocket walking
Yeah.
around, there's really no need to take the money out. I don't really I tend to think that the money that you have in the accounts are designed to work for you, and in a large part that's it. If it's working negatively for you, then you have to evaluate how that's working negatively for you, or do you need to reallocate somewhere else? And that's where, for me at least, tracking the overall daily performance, I track for myself how my holdings or the amount under holdings changes on a daily basis, and then looking at it on a weekly basis and having the evaluation or knowing initially, hey, here was my entry points, or here was where I started at, and here's where I ended, or here's where I'm at currently, and keeping basically an eye on the scoreboard to calm the nerves in the short term for either positives or negatives. And like I said, I don't necessarily like to see too much positive in the short term. A major positive in the short term is seeing if we saw the Dow Jones jump by 15% in a day, that would cause some concern for me for what's happening the next day.
Yeah.
If we saw a consistent 3% growth or 2% growth or 1% growth day over day over day over day, that's more sustainable, I think, to string that together for 7, 8, 9, 10 days, as opposed to keeping a 15% growth, 10 to 15% growth in a day sustained for a 2-week time frame.
Yeah. Just for visuals, you could see the 26. It's on the yearly, so it's 26 years from the top to when it finally breached the top again, and an 89% decline. So that'd be a long time.
That would be if we're sitting currently at the top of the market, right?
At the top, but you don't. I mean, with your feel with the modern monetary policy, it's a tongue twister for me. And it kind of showed with COVID. I kind of agree with you. Is that it's not going to happen like that again. Like they're gonna pump the money into it. They're going to do some sort of bailout here. They're gonna fix things. They're gonna manipulate it to make sure that it doesn't do that. We may get a big dip.
We might get a 30 or 40. I think that's like the next. I think what we saw with the COVID is as big as they want to let it potentially go.
Yeah, and if you can look at the blip at the top of the screen, that's all it was. It wicked down, and then we ended at all-time highs for the end of the year. And remember, that started in March. So the turnaround was incredible. And this is on the Dow. I mean, it's even more ridiculous when you look at the DAC. It's like, it's just amazing. So,
and I personally follow the NASDAQ based off the fact that since the last 18 years, it's outperformed any of the other major indices. I want to say it's the last 18 years, but I could be incorrect on that statement. But it's somewhere close to the last 20 years. It's been unbelievable, the amount of consistent outperformance versus the other indices that are out there. And so that's why I probably personally invest a little bit or have more faith in some of those leveraged index funds that are out there. I believe in TQQ more than I do UPRO or UDOW, based off of that overall mapping of the DAC versus the S&P or
and that's
the Dow
the
Jones.
equivalent for the SP, the triplicates, right?
Yeah, so UDOW would be the triplicate for the Dow Jones, and then UPRO would be S&P triplicate.
Yeah, so this is the T-Quiz and S&P and the QQQ, or NASDAQ. And so you can see the trend since basically 2002 has been, beat it. But if you look at the difference, now obviously you want to be in the uptrend. So you wanted to be in all the tech stocks after that point in time because they got hit so hard. So
yeah, and then you look at going forward as I look at and evaluate our overall economy and how we're moving, even post COVID, or just a general trend that we were going towards, is that tech is more or less the future of everything that we are going to be doing. I don't know. It's why some of my holdings right now are more balanced holdings to provide exposure to other areas beyond, say, tech.
right.
It provides some stability or some
Yeah,
diversification.
Banks, oil.
I got banks. I got oil. I've got some other artificial intelligence stuff.
Yeah.
But for the most part, I used to be really, really tech heavy, and now I'm just really heavy in tech. And so, it's adjusting back the overall holdings.
Yeah.
Instead of being 90%, maybe being 65% heavy tech.
Yeah. No, it's
So that's just kind of the mindset that I've had over my evaluation of my holdings. And being realistic with myself is that I know for a fact I'm not going to, if somebody's looking for my own personal advice on differing topics on what to hold or what to buy or anything along those lines, I usually always err on the side of some type of indexed holding, and then from there it's just a dependence upon what is their risk tolerance. If it's somebody like me that can sit there and watch the numbers go down and enjoy watching the numbers go up as well, and be indifferent more or less to the ebbs and flows of what the markets are going to do, then yeah, I would tell them to maybe look at a leveraged fund as an option. But if they can't handle that, then I would look at them getting into some of your more index funds that are managed by your Vanguards, your VGTs, or your VOOs, or any of those funds that are going to provide for you a decent return, a very, very strong return with low fees that are associated with it. But you don't have to actively manage, because the fund managers are doing that active management for you more or less. And when I say active, it's not like they're making big moves on a consistent basis, but they're making enough moves to know, hey, what's of value, what's of not value, and what's going to provide the most value for this overall holding, because they need to. And
now you're just not going to get the growth. You're not going to get the growth.
Well, I mean, VGT has certainly had growth over the last few years. I think this last year it had 40% growth, and the year before that it was something like 49% growth. And
yeah, but what was TQQQ last year?
It was a lot.
Yeah.
I mean,
it just depends on who you are.
But it's that risk tolerance. I mean, if somebody can't handle seeing a 50% drop or a 60% drop in their overall paper holdings.
Right. Do you worry about the fees in those at all?
The 1% fees for TQQ or any of those other leveraged ones? No, because what they're providing on the other end, a 3X on the overall holdings more than covers that type of stuff. And certainly if somebody were smart, and I'm not, they would be able to make these trades and trade the future holdings and be able to get that leveraged amount. But I am not that smart, and I'm not claiming to be that smart. I'm not that good as far as being able to balance and hold a group of holdings that would be able to return the similar amount of what these individual funds have provided for me. Looking long term, is it going to pan out? It might not, and that's with everything. Stocks could go up or down. It just depends on what the overall horizon is.
Yeah.
So what do you feel like for you? Because you've done a pretty good job of interviewing me, but for you look at something completely different than me. And so this is where it's kind of like the yin and the yang.
We are the yin and the yang.
And so, in my basis of things, I've justified for myself what I look for and what I do. And for me, I have those justifications based off of my overall experience with the markets and what I feel I'm comfortable with. And so I can handle the risk of having it come back and lose on paper 50, 60%. But that's something that I know that you have a differing view on.
Yes and no. I'm an ever-changing beast, as you know. So my Twitter handle, other handles that I use is Forged in Crypto, and there's a reason for that. I mean, I've invested ever since, 401k wise, whatever that was. And I just set it and forget it. It is what it is. There was a point in time where we were both looking at the 401k and realized we had
1% growth
1%. I think
for the year.
I think you had 1%. I think I had minus 0.5%.
2015.
And I was like, it was a good year.
It was.
And I was like, what's going on here? This doesn't make any sense. And so, we called a financial advisor, and there's a bunch of blah, 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 this and that. Yep, just hold through it. You'll be just fine. And I'm like, it's just things didn't click. That was the point in time where I was like, okay, there's got to be a better way. And we started researching different firms. We went to Merrill Lynch. They started talking about
200 moving average, 50 moving average, and the different things. And then it was like,
it's like, okay, well, that piqued our interest and that kind of stuff. And so I didn't do much with it from there for, trading or investing or anything like that. You did. You took your stuff out and you ended up starting to kind of allocate yourself. You took a much more aggressive approach. I listened and was like, okay. But all the while, what happened down the road was in 2017, I bought my first Bitcoin. And this was, I didn't make a big purchase. And this was in the summer before, if anybody's listening that knows, before they split to BCH and BTC and that whole deal. So, and then it went on a nice little run. Well, I was a genius, obviously, because I can't remember how much I made percent wise, but I made a lot in a short time frame. So I bought more in 2018.
Black tar heroin. And once you go up, you got to keep on going.
And I bought a lot more. I was like, oh, this is just too easy. You just buy it and it goes up. And it didn't. And so at that point, I started to look at more in depth. I started following people on Twitter, and then you just started seeing traders on there. And so I got into the trading aspect of it, and I went deep. I mean,
Yes, you
did. For a couple of years, that's all I did was I took classes, I watched videos, I studied, I literally was just immersed in it forever. And it was crypto based, like all crypto, like to understand the different scenarios and the psychologies and that kind of stuff. And it just grasped me. Like it just took a hold of me, and I loved it. So, but with that, I mean, through every year since then, in the trading side, I've changed with it. Like, I'm constantly flowing with what's going on, and I want to be that way. I don't want to be steadfast in a way for myself, because I don't do that normally. I want to make sure that I'm looking at what I can do to better myself, or in this case, better my holdings. And so I'm always trying to learn new things, and I'm always trying to just pick at different information. And so currently I am, I guess you would call me a long-term holder of certain things and a short-term holder of others, but I have a philosophy behind it. So my long-term is, it's what it is. I consider it over a year, which to some people are like, okay, you're ridiculous. But my long-term is over a year. And I have to have some conviction in whatever that is, that I feel like this is going to last for a year. It might not happen. Most of my stuff that is in there, it is at that point in time. And whenever I get into it, that's my goal. And then from there, my short terms. And so in a bull market, let me back up a little bit. So in a bull market, my theory is I want to have as much of my cash allocated as I can. Mm-hmm. As in when you get those dips, I don't want to be sitting where I'm at now, or sitting where we're at now, and be like, oh, I have to buy. Does it happen sometimes? Yes. But my overall goal obviously is to get in as low as I can and as much percentage as I can, and then use what my different exchanges for both the traditional markets and the crypto markets in margin allow me to then use my short-term trades. Short-term trades is where I shine. Long-term is I put predictions out there, and they're ridiculous. Like my prediction for BTC is like 300K for this year. So don't take that.
500K. Yeah, I mean, you
don't
can
get
put
crazy.
it.
Don't
you
get
can
crazy.
Put it a million.
Don't get crazy. Don't get crazy. But 300K, is it like? And that's
could
from,
it? It could.
That's just,
it could, but it
sure.
could not.
If it followed the same bull run as last time, I don't know. Anyways, that's getting beyond the point. So my long terms have always just been a little funky in hitting targets. So I have to change my philosophy into the flow of it, and that's come with a lot of the trading and using the trend trading itself and backing out on the time frames. In the beginning, I'd be like, oh, we get down under the 1 hour, the 30 minute, the 15 minute, to make a trade that I'm thinking is going to be for the next, 6 months. Oh, wait, it doesn't. So I had to open up, expand my time frame and get back into those, like we're looking at here, on the QQQ SPY is on a monthly. And so I have to do the same thing when I'm looking for my long-term trades. I'm looking at weeklies or monthlies on, Bitcoin or, Apple or whatever I feel has the fundamentals for me to get into and believe that it's going to go up long-term, but also the trend itself is showing that it is in that long-term bull trend. So in this case, like with, if you look at Bitcoin, so I had a friend of mine who gave me a call, and this was, it was exactly in September or October because it was just after the big event happened in October for us.
Yes.
And he gives me a call, and I pulled into Sportsman's Warehouse, and he's like, "Hey, I'm looking to, finally get into Bitcoin." And I'm like, "Oh, it's funny. Like today was the day that's like I was already in because I was watching it back here, and this was I bought into Bitcoin here, but I still monitored it, and other people talk to me about it, like when do I feel for a long-term hold, and this is one of the indicators, the Ichimoku cloud, it shows it once it turns green here, but what it's doing is all your prices above certain aspects, the cloud, the baseline, the conversion line, and it's telling you that this is the time. So at that point it's like, okay, now's the time to buy the dips on the daily or the 4 hour in that time frame to then hold it long term. So that's the theory I have now, and I can get those on all levels. I can look at it with whatever it is, and then I'll hold that long term and then look at my trades for short term. So like right now in Bitcoin, I'm in a long, but I have different buy points. Looking that we're in the last bull run, we had 30% plus drops, right? So I have I look at fib levels and different liquidity zones, and I put some buy orders leveling down through here, and we're sitting at this point right now, 33.24. So I'm actually probably just in profit or just right at break even with my first couple buys and this one down here. So my goal with that is to obviously trade it in a short term, and when I say short term, there it could be in an hour time frame, depending on, like over the weekend I had a couple trades that were 4-5 hours long, and they worked out well, or it could be a couple months long, but they're going to be under a year.
And on those, you're setting these points prior to entry, or after entry you set them and then you don't have to watch it anymore, type of thing.
So I mean, I'm always watching it.
Let's be everybody's whenever that markets are active. BTC's just 24/7. So.
Yeah, I don't sleep.
Yeah.
No, so ultimately what I'm looking for is, and I saw this on the way up as we were going through, each time that we would kind of come to a top here, I would close out some point in time where things would kind of start to die down. And so when it came up in here, I probably closed in this area around here. I don't know exactly, I could pull it up, but and then I would pull my fib levels, or I would usually have them already up, and I would just adjust them to wherever this kind of local top was, and then I would put some buy orders in down below, and then if it, like this one was an easy one, it just kept going up. So I kind of would get out, buy back in. In this scenario, I think I got out in this area, and then I didn't get any buys, and so I waited for another signal for me, and I ended up getting in right, I think, in this candle here. And it went up. I sold short. I sold right around the 34 range because that was one of my big marks. So it missed out on the extra little bit here. Got in some more. It's just a flow with the market. Yeah, So I'm watching volume. I'm watching just the sentiment. It's different too. Like I can't do this when I'm looking at, like, if you told me to trade Apple the same way,
You can't.
I can't, because I don't. I mean,
your ultimate kryptonite is if I said, hey, trade a leveraged index fund, because it's so difficult to trade a leveraged index fund above this, because you're going 3x on whatever the markets are doing, which is hard to get like a 15 or 10%, because you could see that in a second.
I think what it is, and this is going to sound, hokey, is more of I have the feel of where things are at. I have the sentiment of it because I'm watching it. I follow a lot of, people that are on different social media platforms. I'm reading the news about it, and I do that with the regular markets too, but not as in depth as I am with Bitcoin or cryptocurrency in general. So there's a feel to it too. Like this whole ride up, I wasn't afraid of any, like, oh, we're going to go back down to 2K, we're going to go back down to 6K, knowing that, oh, once we broke 20K, once we broke the all-time high, I was like, this is free run. Like, this is going to be a fun one. This is going to be a moneymaker. And it was. So now we can see we've got a much bigger correction that's in play.
but a larger runway too for it to fall back on and still stay in the game.
Oh, there's
you're talking it. I mean, we were talking about this before we came on, and I think a little bit once we did come on was that okay, it crossed 20K, which was like all new all time highs.
yeah. Yeah.
How long ago was that it crossed that?
A month ago.
Less than a month ago. You're looking at the charts there as far as what, like the 17th, the 15th of December.
The actual all-time high. Let me pull it up. So the actual day, because I can't. I'm sure I posted it somewhere because it was a neat day. So
19.6.
So where'd it go? Lost it. Right here. So your actual day when it crossed the first time was on November 30th.
Oh, okay.
And then dropped back down. And then December, when it actually ripped through and went through, it was December 16th, and that was when it started the next little run.
And from there, it went up 100% from that point in time.
Yeah, and that's less than a month away. That was less than a month. So yeah, it was a big run, and it's a big. You got to expect some bigger corrections. And 30%, to be honest, is not that big of a correction. But we got a lot of institutions, man. Like
they're ready to buy.
These guys are ready and willing to.
And deep pockets too. There's a lot of cash sitting on the sidelines right now too.
Well, there's a lot of people that go by the adage of they don't want to be first, but they want to be a close second. So right now, this dip that's coming through, this is the close second.
It's providing that opportunity. What was part of what triggered this ultimate dip right now? Somebody sold 180 Bitcoin or something like that. I don't know. You read somewhere. I'm not nearly as plugged in as you are, but it's like 180 Bitcoin, and it causes for a dip like this. It's like these institutions are just ready to buy up millions and millions of these things if they can.
And you read that, but that's not what's happening. I mean, that's not what's happening. And they're going to tell you, oh, I mean, what was it? 2018 was the all China fight. It was always China. China's banning crypto. China's banning crypto. Oh, they were in a bear market. There was people that were predicting that from the get-go, and they just have to find a news feed to fit the narrative. Now, there's times where you get like an exchange hack, and you'll get a quick rip down, and then those usually get bought right back up. These are corrections. These are something that's just market sentiment that's going to come through, and you're going to have.
In a healthy market.
Yeah, right. You have to have these. Like,
if it just kept on going like this, you would hear the cries more and more for the bubble is going to burst sooner rather than later. If you don't have these corrections, or if you don't have these movements like what we're having right now across the board, you're going to hear the bubble burst chatter.
Always.
Much more.
Oh, yeah. It's hard to say the bubble burst when it's still sitting at $33,000.
Yeah, 33. That if you said that back in July, even if you would be looking like a weirdo back in July if you were touting you'd be looking like somebody that said at the start of 2021 that Bitcoin is going to go up to 300,000. If you would have said back in July it's going to go up to 40,000, you know what I mean?
Yeah.
It's a similar type of movement that it can have. Are you necessarily wrong? You could be proven right. It's just a matter of the time. What is time going to hold for you?
Yeah. Well, nobody actually knows.
But getting back to your deal as far as the overall how you trade and how you look at things, it's your mindset has changed over the last year, 2 years, or it's constantly changing in the overall picture of things. You want to make sure that you're allocated a certain way. Do you have in your mind certain benchmarks that you're looking for as far as I want to be 80% this and 20% this, or I want to have exposure in this and I'm wanting to limit my exposure in this because, back in private conversations that we've had back in November, as recently as November, you're like, I feel like I'm over allocated in Bitcoin. Mm-hmm. And you can feel that way whenever you're like, gosh, I'm confident that it's going to go up, but I just know that I might be over allocated in that. And then if you continue with the over allocation or your feelings of over allocation, and then you're proven right with it running up to 30 or 40K, you get rewarded in the short term. But in the long term, has your view changed in the overall allocation of keeping track of your your overall percentage? Because as it goes up, let's say if you went from 50% allocation back in November and then it goes on this nice run, well, now your overall amount under management has then increased from 50% up to 70, 80% without, and these are theoretical numbers. Yeah. I don't know exact numbers, but it changes based off the overall amount under management. And so now your allocation gets that much heavier. And so when you go to look at that, is that something that you are continually evaluating? Because that's something that I've had to do personally over this last year, is look at where my allocations are, going from really tech heavy to just tech heavy, and then finding other balancing allocations that provide the growth potential, but just more
Yeah.
diversity.
I'm always changing, but with that is I am still heavy Bitcoin, and my process that I want to look at more is to have, when I have conviction in something, there's a reason for it, because I'm putting the time in to look at it. I'm putting the effort into, whether I'm charting fundamentals, all the above, when I'm entering something new, or whether I'm in it now, is when I have that conviction, I want to be heavy in it. And because I trade, I use stop losses and I use other things. And my goal is to have small losses and big gains. So I want to be heavy in things that are, again, like I have conviction, like with Bitcoin itself, and it came in strong in that time frame with the institutions buying. Once you started seeing a lot of these big companies coming out that were buying, I mean, I started to allocate, heavier into the in my cryptocurrency just to Bitcoin. I was trading some altcoins here and there and that stuff, but I pushed it into a lot into Bitcoin.
Mm-hmm.
I think I'm 78 or 80% Bitcoin. And then Ethereum, it was number 2, and then a bunch of other little altcoins that are in there.
Yeah.
Because my conviction was that Bitcoin's going to be the one, in that portfolio itself. And it came to be true, because Bitcoin outran all of them once it broke all-time highs, and that was kind of the theory. And I still think it's going to kind of go that way. Alts are going to have their days, and I don't know if they're going to have the alt season that they did before. Some will. But the overall way that the alt season, if you remember last time, every time we came into the office and we'd open it up and be like, oh, this coin's up 200%. Oh,
here's 1,000%. Here's the 800%.
There's a whole, you'd look at like Coin Market Cap, and there'd be like the whole page would be like 100, 200% increases. And you're just like, what is going on? So for me, I want to be fluid, right?
Mm-hmm.
I want to be fluid in how I'm investing and where I'm putting my money, and watching the markets and being up to date with it. I'm not going to just set it and forget it. That's the thing that I did in the past. I'm not going to do that anymore. So, but with that, I can have my entries. So I have 3 things I always do, right? Before I get into something, and you know what it is I'm going to have an entry point and an exit point, right? And there's 2 exit points. There's a stop loss if it goes too low, or I have my take profit point, right? Mm-hmm. That's a short-term trade. In the long term, it's similar. Right now, my take profit's pretty dang high. I'm looking for 6 figures before I start taking profit on my spots. So, but
is there a point then that you would look at? You have, like, say it dipped down to 15. Say it dropped 50% from where it was at. Is that I am liquidating all BTC?
50% from 40K?
Yeah.
No.
But I'm just saying, like, there's always those marks on here based off of either fib levels or some type of line here that you have, whether it be red or yellow or white. Now, whites are your entries, but just depending on where we got up to, and then where is a decent point for exit, because your entry point on all of your current holdings that are both in a hard wallet, or then that you play around with on your exchange. Let's just say it's Kraken. I think it's Kraken, but I don't know for certain. And is there a set exit point that you have for those that's on autopilot right now, or is it just adjusting as the days go on for market fluctuations in BTC right now?
Well, right now I'm looking at the fact that if it went down to 20K, that's, for me, that's your higher support. That's the all-time high. So
yeah,
in the way I trade, it would be a retest of that break of that all-time high, come down and retest. And this is actually, they're just fun to do as you take this different patterns that came through. This was from 2019 high, and then the breakdown from there. And and I took it all the way until the whole COVID situation happened. So, because that was kind of an anomaly. Mm-hmm. But I took that through, and then just adding another pattern I would go through. I could see something like that if this was a longer term consolidation between now and September, and I wouldn't get out of spot. once I see 20K break and go through and not get retested, I would probably start selling some spot.
So when you say spot, that means the stuff that you have that you're actively trading or using
No,
as collateral on Kraken, or
yeah, I have some on collateral. I have some in my hard wallet. Like that stuff, it's there. I'm not trading. That's my long term. So my long term stuff is what I'm going to hold until then. At that point in time, unless something major comes out. So again, I'm fluid. So say somehow the government comes out and says, well, you can't buy Bitcoin. It's illegal. All you companies that bought it have to, liquidate it, this kind of stuff. I'll probably get out because you're going to see at least a huge dip. And then I'll watch it again and maybe get back in depending on what goes on, unless I'm going to go to jail for it. So, but I mean,
there's no hard line in the sand currently for based off of the current numbers that you've seen over dumping your existing holdings. The existing holdings you're going to be holding indefinitely until something major happens.
I have good entry points right now, so 20K, I would still be in some pretty damn good profit. So
that's what I mean. For me, like I look at my holdings, I've got great entry points, or I feel like are great entry points. But great entry points for me can always adjust based off of, well, what's the market going to do? Are we going to see another 40% drop? We might. But what did we go up to see that 40% drop? And similarly, I would expect that when you're evaluating your BTC numbers, that you're watching the numbers go up and up and up and up and up. But then if you see a 40% dip and the overall sentiment changing in that regard, the number changes.
Yes.
The exit point changes.
100%.
And so if we're seeing that we string together, something similar to the end of, what is that, 2018, right before 2019, where you have a couple of those wicks.
This year?
No, that.
Oh, in here.
Yeah.
Gotcha.
But obviously you had some of that phase where it was trading sideways for a bit. And then all of a sudden it just dumped towards the end. And is that something that you would then be looking at the overall market trends and you'd be sounding or ringing the bell or the alarm of, hey, I am dumping my personal stuff to letting that be known to across the world? Or is that something that you're just like, you know what, I'm going to trim? Or is that something that's more, no, I'm just going to stay the course?
Well, I'll probably post it on Twitter, but I'll, in our Discord channel. I'm not going to go, banging a drum downtown, in our downtown area. I'm just going to be like, hey, Twitter, Discord, and just letting, I post my charts and what I'm doing. But yeah, if the sentiment changes, I change. It's the same thing with any situation that goes on. I don't want to be dogmatic because I don't know everything. I'm dumber than a box of hair. So I got to be able to move and change and adjust so I can, float like a butterfly, sting like a bee.
Well, I think what we look at here is that those people that are on the Discord, when they see that you're making moves short and long, or when I see that you're making moves short and long, the distinguishing factor is that the underlying holdings don't necessarily change when you're making those moves shorts and longs. And so at that point where you make a move on the underlying holdings or the thing that you're using for the leverage or the trading or the margin or whatever, whenever you make that conversion from BTC to cash, that's when the real alarm bell should start dinging for everybody that's kind of listening or watching or looking at on Discord or Twitter or whatever, is that once you make that decision to move the underlying holdings, that's kind of the bellwether.
Yeah, and I posted in the Discord a big long diatribe of making sure, trying to get people to understand that that's what I'm doing. I'm not selling my spot. This is, and when I do, I'll post it. I'll let everybody know. But this is just my margin trades. Ultimately, with the bigger changes that we've had in the last year, this is my income. So trading for me is my income, and that's what the margin trades are. So is in quotations is my income, and that's why I'm fine with it being short term, because I don't have another job. That is my job. So,
and it's a 24/7 job now. I mean, more or less.
I don't. Hey. I mean, it's I could if I wanted to, but I don't do that. I mean, you see when I post, some stuff in the evening times and during trading days, and
sometimes the market though dictates when you're going to be active based off of certain moves. And if I were looking at the markets overall, if I played more in the crypto world, if I had more knowledge base, I guess, or confidence personally, I would allocate more into the BTC world. Right now, I'm in that 5 to 10% range of allocation. It just depends on. I haven't looked exactly today to see exactly what that breakdown is. But for me personally, having some allocation towards the crypto world in that of my overall holdings in that 5 to 10% range is kind of where I feel comfortable based off of my limited knowledge. And I think there's going to be a lot of other dummy investors like me that are out there that don't necessarily know enough about this, that will have or want to have or are looking to have that 5 to 10% overall allocation and the amount under management that they have in or exposure to the crypto world. And you personally feel more comfortable with the more allocation of your amount under holdings into the crypto world than you do in the traditional markets.
Forged in crypto. I mean, that's what got me here. I mean, I love the traditional markets too. Sad part is my traditional market portfolio is probably 30% crypto oriented.
So even when you try to get out of the crypto world, you're basically sucked right back into what
Actually,
you know.
I can't say that. It's probably closer to 40 because my Riot call is delicious.
And that's consistently performed well for you. Are some of your option calls, but then additionally, just looking at making those plays in the crypto world as it pertains to the trad markets, and looking at that because it's something that you know and that you're comfortable with, and it would be similar to, an individual that has such a knowledge base in a certain subject or a certain area and being able to make the calls on these individual companies. I'm not that intelligent to be able to know the inner workings of a tech company. I just know that tech as a whole and having exposure to tech as a whole is generally a positive thing. And especially the mega large cap holdings out there, they typically perform fairly well financially and they have a good base and backing and they will continue to do that. And you could draw the parallel, I think, at least in my mind, I could draw the parallel to, hey, you're looking at large tech as being, or BTC as being the large tech of the crypto world. You got BTC more or less, if you were to look at it, being the kind of that guide of the crypto world, similar to what large tech is going to be for the investment world over the last few years.
No, that's definitely, I mean, that's what I know. So it's kind of where I lean to when I'm investing. And
it'll pay off too. It's paid off for you. I think overall what you look at is that for those that may have entered a little bit later into the game of things, as opposed to you that's been forged in crypto over the last 3 years, over 3 years, 3.5 years, and really cutting their teeth and learning what the ins and outs of the of what these charts do, what the volume is, how it pertains to the fib levels, how you can incorporate the EG clouds and all these things that I don't know, but I hear you talk about. I just know the terminology and phrase. It's stuff that you've crafted and learned over that time frame that for people like me, I didn't take that. And part of that was I didn't necessarily take that upon myself to know that, but you did. You took that upon yourself to know what the terminology is, know what indicators to look for in both the short term, for primarily the short term, I would say.
Yeah. Oh, like I said, I use it long term too, but it's more of like a, there's different ways to use it. I mean, I use them for the longer term outlook, but I'm definitely a short term trader. I'm not a day trader. I don't make, 30 trades in a day. Like I'm not on the 15-minute time frame, but, I will make 10 trades a week, something like that. Usually, but those are in my eyes a, higher probability of going to make me some money in that short term.
And when you do make those trades, or when you are looking to make those trades at the point of entry, circling back, you typically have your points of exit predetermined, and on the completion of the purchase of the whatever it is, let's say it's an option or a call or a put or whatever it is that you're gonna do, you're primarily setting that exit point prior or upon the close of it. Is it at that moment, or is it you wait?
So in my margin trades, I'm gonna like right now, currently I'm in trades and I have stop losses set for those trades. So I do not have a take profit for those trades right now. So,
I see.
But I know where my mindset would be for a take profit. So I want to know when I'm getting into a trade. I want to know where it is when I want to get out. So,
and currently you're just trying to you're trying to minimize the losses on the short-term time frame which is why you set your stop losses at the entry of your existing trades.
Right.
If you were looking for a long, would you be setting the stop loss at the completion of the purchase? If you say I'm going to go in this long, are you still setting a stop loss on that, or everything gets a stop loss upon purchase?
So my spot, I don't have. I took stop losses off my spot.
Yeah,
so.
Your underlying holdings of what you have in BTC or whatever.
Because what I don't want, because what does happen is you get flash crashes. So whatever I did have on there, if they just had some like random wick that went down to $1 and liquidated me, I'd be like, oh, that would suck. So I don't want, and then jump back up to 30K. It's not, I mean, that's not going to happen, I hope. But I mean, you get those random ones every once in a while. So my spot I don't, but my leveraged ones I do. Like as soon as I get it in there, I want to set my stop loss because I want to walk away. I don't want to be staring at the screen and being like, oh yeah, I want to get out. Will I check it throughout the time frame? Yeah. I'll look and see where it's at and kind of know, just because I've looked at the charts a ton to see where it's heading, where it's going. And if it starts to move in a direction that I don't see what I like, and this is both burned me and made me money, is I'll sometimes cut it short, either with a even smaller loss or with just a smaller gain than what I thought I was going to get. And it's done two things. Like I've really tried to stick to my guns as much as I can to make sure I stick to those stop losses because I did it for a reason. More times than not, I have cut it short or whatnot, and then all of a sudden it'll
jump.
Yeah, it'll jump and hit my take profit, or I'll cut it or I won't. A lot of times this has happened too, where I'll have an actual bid in, and it gets short of that bid. It actually happened today. You can look on the 4-hour chart here. It came just short of my bid. I actually front run the 50 here. I think I was at 38 something. It missed it by like $16, even though I front ran it, a little bit, and it missed it. And sometimes if that's the only bid that I have out there that I'm playing on that deal, I'll take away my order that's on the books and I'll walk away, and then I'll come back later and I'll see this candle. Oh, my order would have been filled, and then I would have been in profit, and I'm sitting in a point in time. And so for me, I think those are the things that I'm always trying to do, is stick to my guns and stick to what I know and why I'm getting in and why I'm getting out. It's the psychology of the game, man. Like it's complete psychology, and it's amazing how it just runs in all the markets. You can see it. So
yeah, definitely. And is it to get to is there a hard dollar or percent amount that you are looking to exit with your stop losses? If you are entering into a short-term trade, are you setting it at, hey, if it dips below 10% or 11% or 12%, is there a number that's there?
It's all dependent. I mean, it depends on the allocation, how much I have allocated to it, what the current trend is. Like I have a pretty wide stop loss right now because I have another bid down lower. So I wouldn't want to get liquidated, or not liquidated. I wouldn't want to get stopped out and then hit that buy down below and still not have my stuff in. So it's dependent on each trade, really. So I don't have a certain number that's there.
It's just nobody ever likes to feel like they lose money, and at certain points, I guess for the reason why I ask is because for me it's a little bit different. I don't feel like I ever lose money until I make a sale, and but then again, you also don't ever make money until you make a sale. It's a two-way deal. So in the process of things, it's just the amount of money under management changes over time. And so on a growth day for me, it's a growth day. I'm not actually pocketing any of that money. It's all paper wealth, or it's paper growth.
Yeah.
And to some degree, that's happening with what you're doing in the BTC world. But in addition to that, you're also trying to supplement with your margins or your options or your shorts and longs that allow for you to kind of make money to pay the daily bills that happen, because this is your daily job. And trying to establish, at least because it's a foreign concept for me, and I don't know how many other people that are on the Discord or that are on your Twitter are able to, or are dependent upon the trades as far as making the money or doing differing things along those lines for a consistent income. And so trying to establish that in my mind is there a percentage amount, is there a dollar amount, is there a certain amount that you feel comfortable losing, or that you
Well,
outline, but each time it's different depending on the overall allocation.
my one of the sayings I go by is you can always make more money. So, I mean, like it's all dependent, and usually the chart's gonna give me a exit point when I look at it. So I'll set a stop loss for it once I enter it. So if you look at this is TBLT.
Mm-hmm.
This is one of my holdings that I have. I think we own it as well, and my entry point is in this green box as it was coming through and it broke up over here. So my stop loss was below the low point down here. So, because that's your last zone of liquidity basically. So, and what I've seen in the traditional markets, sometimes you get it with these low caps, like these small low caps, is the small caps is the wicks down to kind of, take out the stops. So I won't set it right at a point. I'll usually give myself some cover room. So in this scenario, with this one here, I think my entry point was right in this range. I've been in it for a little while, so it's hard to tell. Why is it doing that? Let's see here. So I was probably in this range here, so 13% loss on that.
Mm-hmm.
But looking at, and I don't have a take profit on this. This one is, I think, is going to be a longer term, bigger. Like as it grows, it has a lot of room to grow because it hasn't been out for very long. So, but I mean, that's kind of the stop loss on that one. It just depends on what the chart looks like. I think the largest stop loss I've ever put on there was like 40%. So, and that was on an altcoin that, it
could jump.
It was real volatile, and I just didn't want to lose out on it. It could drop down, lower. I just didn't want it to wick me out. So,
yeah, and that certainly can happen with some of these small caps, but probably more so in the altcoin world, where you can have them wick down in that time frame to really basically disappear.
Yeah,
literally disappear.
Yep. It's quite amazing. There's some of them that you see them on there, and the wicks just go all the way down to like $1, something ridiculous. And you're like, but
it's a small cap world.
Yeah,
altcoin world.
Well, we're coming up on our hour here, man. It was this was our get to know each other, or get to know the trader, get to know the person that they are. We're just the normal everyday dudes that just trade or invest. And I'm Nate Harper, and that was Jeremy Winn.
Alrighty,
thanks, guys.